Welcome to the Page One Podcast, a podcast featuring a variety of guests and thought leaders on topics ranging from digital marketing, sales channel strategies, influencer marketing, best-in-class product launches, and all the details about how to accelerate sales. Now, here's your host, Luke Peters.
Thanks for joining us on the Page One Podcast. I'm your host, Luke Peters, CEO of Newer Appliances and Retail Band Digital Strategy Agency. We're now in a coronavirus world, and this is on everyone's mind. So I'm going to adapt all of these interviews, and we're going to get you, the listeners, the most important information, and we'll get right into our questions. And before we do that, quickly, this episode is sponsored by Retail Band, where we can give your business owners a blueprint on exactly how to grow their digital sales, either direct to consumer or via channels like HD, Wayfair, or Walmart.com. To learn more, find me on LinkedIn or email me at luke@retailband.com. And in this episode, you're going to learn from entrepreneur Jeff Grog on how to strategically plan for the rest of 2020 in every aspect with COVID-19 in mind, and also how small and large CPG brands can find investors right now. Jeff is the founder and managing director of JPG Resources. He's founded businesses in spaces ranging from athletic training to alcohol beverages and contract food manufacturing to a new food venture fund as well. And he brings 25 years of experience as a leader in the natural food and beverage space. Jeff, welcome to the Page One Podcast.
Thank you for having me, Luke.
Awesome. And did I miss anything there in the intro? Anything you want to add?
No, that was great. Thank you very much.
Cool. So Jeff, kind of before we get into a few questions, do you want to briefly describe to the audience what you do? And that way they can kind of just understand more about your experience and expertise.
Absolutely. So my background was in food science, and I worked at Kellogg's, and then I moved to Kashi, and so experienced a high growth business after a big CPG. And then as that was absorbed into Kellogg's, I stepped out and started a consulting company. And now we have, as you mentioned, consulting, we have contract manufacturing, we have a fund, and we also operate a couple of brands. It's really fun because we get so many different lenses to the industry around food, but also just business management in general.
Yes. And then before we get into some questions, I mean, you have several businesses here, managing a fund and doing, a couple of other things that you listed right there. How do you improve your efficiency, I guess, when you might be pulled in a few different ways? Any special tips? Be curious to learn that.
Well, the most important thing is to have great people. And when you've got the right people in those businesses, they operate themselves on good days. And, so I focus on where I need to have maximum input. But I sort of jokingly say I'm on a quest for irrelevance in all of the businesses and can go on to keep doing something else new. But it really is about just recruiting and enabling a great team.
All right. And then I'll pry a little bit more because look, I've gotten to that point too. I luckily and fortunately have a great team, but it wasn't always that way. So what was the change? Because I'm sure there was a time in your life when you were, full on 100% in one company at least, or maybe a couple. And then now you've been able to kind of pull yourself out. Was it literally just making those hires, or, what was the thing that kind of that box you checked that allowed you to kind of work more on the outside of the business?
I think part of it was getting to scale, a little bit of scale, to be able to afford those people who are better at me than all these different aspects of the business. So, my goal is that I'm always hiring somebody who, when they step into whatever their role is, that they're better at it than I was, and that always unlocks new potential. So, going back over the last 6 to 7 years, as we brought people into JPG, they were better at that aspect of it than I was. That unlocked new growth, new potential, and it also then allowed me to move on to where I could add the most value.
Yeah. And by the way, I totally see it the same way. And I think it's the most, it's a real honest answer, because sometimes that can be answered in ways that are not that tangible. But literally when companies kind of have enough scale to be able to pay for folks that can really make that difference, then I think those positive changes happen. So I'm with you on that 100%. So, Jeff, you advise companies. You guys obviously have a venture fund, and you're minority and I think in some cases majority investors. And so you're touching a lot of different companies. And how has COVID, impacted these companies that you help?
Well, it's really disparate. I mean, maybe the best two examples are two companies where I'm on the board. One is King Arthur Flour. You've probably heard about them. And especially lately, their response has been phenomenal. But no matter what they do, they just can't make enough flour right now. It's just through the roof. But it's also given them a chance to be more public about who they are and draw on their 230 years of experience as fantastic bakers. And it's just such a great time in that company right now because of the growth, but also getting the spotlight shown on them. And then I'm on the board at a company called This Saves Lives, which is a fantastic company doing great things in the world, literally bringing children from the brink of starvation back to health. But 30% of their sales is through Starbucks, which is basically shut down. So that business is really struggling right now just because of the COVID situation and where they have exposure points to the market. So it's been, and that I think is indicative of the 100 companies or so that we consult with in a given year. We're seeing that entire spread of down 50% to up 300% is, it's very individual.
Got it. And, what advice are you giving to these businesses? Obviously, many of these things are external, but, if a company gets hit like that, they can't all necessarily just wait it out. So what type of advice and changes are these companies that are impacted doing?
Yeah, so the businesses that are struggling, you just have to get lean, and you have to get lean quickly and aggressively. You have to really focus on what is working and find ways to amplify that. At This Saves Lives, we've amped up online. I think we've 5x the online business in a very short period of time. Which has been great. It doesn't cover the gap, but it certainly is a step in the right direction. We pushed out some innovation that we were able to get picked up by retailers. So we've been really aggressive selling while also getting lean on the overhead and doing the best we can. So I think it's a time for brands, especially if you're on the struggle side of the equation, get lean and make the hard choices that you may have been putting off and just get really focused on cash and cash management and profitability.
Yep. And that's unfortunately what a lot of folks are having to do. And some of them can pivot, and not everybody can pivot so quickly. Luckily, things seem to be opening up. Why don't we talk about JPG Resources really quickly before we get into more questions so the audience can understand? Are you able to give us kind of a scale of the business, maybe number of employees or types of companies or number of projects you work on, just something that can give the audience an idea of the company?
Sure. Yeah, we've grown JPG Resources now to 40 people and, mostly highly experienced CPG professionals who, spend time in the bigs and then have that entrepreneurial spirit to be able to lean it out and run fast. So we work with about 100 companies in any given year, and from pre-revenue startups to the biggest food companies in the world. And, kind of help the big run leaner and faster and help the smaller guys see what's coming at them and understand the industry more. And then, Snackworks, the manufacturing plant, we also have about 40 people. And then the other smaller businesses, another 10, 15. So coming on about 100 people total.
Great. And JPG, you guys call yourself a consulting firm, or is there another label you kind of put on the business?
Yeah, I mean, we're more than people typically think of in consulting. We're very hands-on. We do the product development. We go out to the plants. We launch the products. We put together all the finances and the supply chain. We do advisory work too. That's more consultative, but we're more of a contracted partner in the businesses. So we're a very hands-on team.
Yeah, that's awesome. And how many years has it been around? And how did you, when you started this, because, there's obviously some consulting firms that listen, and I'm interviewing a very prominent tax and audit firm later on because it's, it just fits in great with COVID and the CARES Act and all those things. But how did you grow it at the beginning? It can be tough, before obviously you had a reputation from the companies you had been at, but like the first couple of years, how were you growing it? How were you getting clients, and how are you adding people at that time?
Yeah, we still grow and add clients in almost the same way. It's almost entirely repeat and referral. We were fortunate, when I first started, I'd come out of Kashi. I'd been there 9 years. We went from 25 million to 750 million during that time, and built some really good relationships with our suppliers and manufacturers and others in the space. I mean, the natural food industry is very collaborative. And so when I started telling people I was going out on my own, just had a really nice referral stream that started right away. And so literally I left Kashi on a Friday, started work on Saturday morning on the project. And, we got busy pretty quickly, and the payback from the network was just phenomenal. So, it just, I don't know that you could do it any other way, to be honest. But it was, I was really grateful and continue to be grateful for all of our partners who, and former clients who then send business to us.
Cool. And Jeff, you work with brands and you help create new products. And, for the audience and for me too, because I'm always curious about these things, can you share an example of like an exciting project or product that you've worked on recently?
Yeah, I mean, recently we've been involved with a company called Cauliflower, which really pioneered the cauliflower crust pizza. We started working with Gail before she launched, and now, it's a very successful business, coast to coast and booming. And, it's been great to see her build that and to walk that journey with her along the way, or I should say run that journey because the growth has been so fast. But, to be involved in many of the aspects of that business as it's gone from 0 to 100 million or so in 3 years has been phenomenal. So it's great to see businesses that have that kind of success and to be a part of helping put something like that together.
Yeah, that's a great story. And I don't know if my daughter's eating the same brand. Maybe she is. Is that one over at oh gosh, what's the place that she gets it at? Trader Joe's by chance? Do they distribute there?
It may be in Trader Joe's. I know they sell a ton through Walmart. Walmart actually has become a great partner to a lot of emerging and young brands, and they've done phenomenal business at Walmart. But they're widely distributed in most grocery stores, most grocery retailers.
Yeah,
do carry Cauliflower at this point. It's a big enough brand.
Yeah,
it's a top 7 or 8 pizza brand nationally now.
Yeah, so I had one the other day. So it was because I'm gluten free, or try to be. Well, usually gluten free, and so anyways, my daughter's, she has that, and she's got the, a few other of those products. I think there's some other cauliflower products, but anyways, That is an interesting story and kind of a cool little market segment. So you've seen plant closures as well and empty shelves. I mean, there's a lot going on with COVID. So on the other extreme, with excess product that has been destroyed, on the short and long term, how is this changing the supply chain?
Well, I think, most categories have responded really well to the spiky supply. Meats obviously has been in the news a lot lately. Meat processing has been problematic because there's been illnesses in the plants that are causing shutdowns. And then when that ripples back to the agriculture side, it's really problematic. So outside of meat, which I would say is a big anomaly, I think the supply chain has responded phenomenally. I mean, there's been a lot of news about issues in the supply chain, but recently The Economist wrote an article about how really the global supply chain has been shockingly good at recovering quickly from these crazy demand spikes. And in some cases, even the regulatory agencies like FDA has been has been providing some flexibility so that the product that normally would be going to restaurants that's sort of stuck and is packaged in a way that's not normally retail can be shifted over to retail and trying to help the shortages and help the imbalances where there's too much food service product out there and not enough retail. That's been the biggest challenge. It's not that there's not food available. It's not that the supply chain isn't working. It's just the supply chains are built for a different marketplace than suddenly exists. And so that transformation is underway.
Yeah, I couldn't understand that. I'm like, at first we couldn't. I mean, there was like a shortage of chicken in the grocery stores. I'm like, how is that possible when it's got to be out there with all the restaurants that are closed? But obviously, like you said, it's that chicken was built for a different supply chain, and I guess wasn't making it into Kroger at the time. So
right. They might be buying a 20-pound case of chicken breasts or chicken wings, or, it's just not packed and labeled for individual sale. When it's going into the food service channel, everything is different in terms of how that package arrives at the restaurant than how it arrives at the grocery store shelf. So there wasn't really a shortage of most things. Even now, wheat flour, the issue isn't that they can't mill enough flour. The issue is that they can't bag enough in 2-pound and 5-pound, consumer-friendly bags. If you want to buy 50-pound flour bags, it's not a problem. If you want to buy a truckload of flour, you can do that. It's just buying a 2-pound bag at Kroger is the problem.
Yeah, that's such a good explanation. So thanks to that supply chain disruption, I now have a freezer in my garage stocked with enough meat for 3 months, because we're getting ready for the apocalypse.
Yes. You and most Americans, yes.
But all's fine right now. Now it just takes me. Now I have to think the day ahead of time before I want to eat something because I got to defrost it. It's kind of funny. Cool. Listen, so I want to learn more about that fund, and I think the audience would be interested as well. Maybe just from an investment perspective, from both sides. So right now, companies smartly are looking for acquisitions because maybe there's some weakness in the market and they can grow their brand. And then also on the other end, some brands may want to find an acquirer. And so for your fund, what are key attributes or things that you look for, if you guys are investing in or acquiring a company?
Yeah, I mean, for our fund is pretty early stage. We're normally some of the first sort of professional money, so to speak, in. We're investing fairly small dollars between $250,000 and $1 million. So we're, right now, especially, we're looking for businesses that have a sustainable plan, that are responsibly managed, that are showing traction in the stores they already sell and aren't out just buying new accounts. It's expensive to open up new accounts in food in particular. So we want to see products that are working where they are, that are winning in place, and that are, that we trust the founders to be responsible. We're placing investments now. We just closed one recently. We got another one we expect to close in the next couple of weeks. So we are active through this. But that's where I see a lot of investors, frankly, who are just parked right now. And there's probably more than half of investors in food and beverage and related space that have just said, hey, we're taking a pause. We're going to sit this out for a little bit until we have better clarity. But there are a lot of investors still active. I think the investors who are more on the acquiring side are more active now because they see it as a little bit, maybe a deal market, a little bit of, there's definitely compression in margins right now, not margins, multiples. There's definitely some companies that are in a time of struggle that might sell for or transact a majority at a price this year that they wouldn't have contemplated a year ago. So definitely on the acquisition side, I would say a little more bullish. Whereas in the minority investment side, especially for young brands under 5 or 10 million, there's definitely some money sort of waiting this out.
And how are you where's the deal flow come from? Again, I'm sure your reputation helps, but is that enough, or how are you guys kind of keeping the deal flow so you have enough deals to look at and then potentially invest in?
Yeah, I think most investors would say there's always too many deals to look at, but the trick is finding the ones you really want to look at. So, we do try, and I think every investor tries to develop some deal flow that's a little bit proprietary, and whether that's through our client set or just, we've been around this space for a long time. So we have other investors who will call us and sometimes say, hey, we're going to invest in this, but we're not filling out the whole round. Would you like to co-invest? And that's a great way to get brought into to looking at a company, because you already know somebody else you like and respect and trust has looked at it. So yeah, it's hard work, and it does help to have a network that helps show us some of the higher quality deals that we get a chance to look at. But we're also, out there involved in the industry trying to find new deals. We just actually, I didn't mention this before, we just partnered with 2 other companies to launch a deal flow platform called Brainjectory, which helps connect early stage food and beverage brands with investors, with early stage investors, because there's such a concentration of those investors in certain markets. And this helps make it more accessible for everybody to go online, almost a dating platform type of thing, and try and make the connections.
Oh, that's so smart. There you go. That guarantees deal flow right there once that gets going. But wow, really, really smart to create that platform. What was the name of it again?
So that's called Brainjectory.
Cool.
Brainjectory.
Yep.
So, and that is just brainjectory.com. Literally just launched in the last 2 weeks. So we pushed that hard, given all the food shows where investors and brands meet are not happening. So we've launched it a few months early, and we're ramping that side up now. But yeah, it's a great time to do that, and we just felt like it was needed anyway because there's such a concentration. If you're in Boulder or San Francisco, it's easy to find investors in food. But if you're in Topeka or Toledo, it's a little bit, there's not the same kind of community for brands or investors to find each other.
Cool. Really interesting, and consolidating eyeballs, which is a great idea. What lessons, have you learned about operating during this crisis?
I think the biggest thing is just to focus, simplify, focus. I'm the, kind of entrepreneur guy who always is looking at, what should we do next? What's the next thing? And, this has been a time to just cull some of that and focus on the core, focus on the health of your team, focus on the well-being of everybody, focus on the work you're already doing, and just, immerse yourself in that and set some of the longer term stuff to the side. And I think that applies whether it's a brand or whatever the business is. Right now is a time to simplify, focus on the core, and make that work. And of course, focus on the people.
Yep, for sure. And this can always be a challenging question, but I think it kind of, can share a lot about yourself or your background. But what's the biggest mistake that you've made? And from that mistake, what did you end up learning?
Well, I mean, so many mistakes. So,
yeah.
We could do hours on that. Probably the biggest mistake that resonates with me is when I launched another plant called Bridgetown Natural Foods that still operates out in Oregon. And, we built that. We just took off like a rocket. We were super busy. The whole time, 3 years, we zoomed that business to growth. And, we were always under talented. We were always hiring. We were always behind the curve on hiring the talent we needed. And it made it so much harder, and it just made it so much more of a heavy lift. And it was financially damaging, and it was just, the insane hours. I had a bed in the plant. If you have a bedroom
That's funny.
In your manufacturing plant, you're probably not doing it right in retrospect, So I think that, and then that led to some other, bad decisions because we were too much in the weeds and not managing the board and the finances and sort of delegating maybe the most important things because we didn't have the team to do the daily grind. So, now that that it's one of those things where it's not like I didn't know better, but sometimes you have to live the mistake to really learn it, I guess, unfortunately.
Well, I love that quote. If you have a bed in your manufacturing plant, you're probably not doing it right. Well, probably for all of us except Elon Musk, right? He's the only guy that can get away with that, I guess.
Yeah. I mean, it was just, it was great in some ways. I mean, the growth and, again, our network really was helpful. And I mean, we went from 0 to 100,000 square feet and 140 employees in, 2.5, 3 years. So that was great, but we really needed to get a little bit better funded and just make the commitment to great people. And now, in my current business, in my current life, I'm living at the benefit of doing it the right way versus the struggle of 9 years ago.
Yeah. And let's talk again about that transition. So we both, you identified, and I completely agree, it's getting to scale and being able to hire those right people. Can you share how it's been successful for you? Have you done that internally? Have you made the hires yourself? Have you had your own HR do it? Have you always relied on an outside recruiter? How have you successfully found kind of the right talent?
No, for the most part, I've hired people directly, especially senior people. I did use a recruiter for the general manager I recently hired at the Snackworks plant. He's been phenomenal. It was a great fit. Although even the recruiter was a tight referral from somebody close in my network. So that also helped. It was like bang, bang. I mean, when you go through a recruiter, you expect a process, and she had the right referral for me within days. So I think that, it's always best if you can depend on the network, takes so much risk out of it. And I also I've just always got in the back of my head, there's a reel of, I want to hire this person. I want to hire this person. I've always got a list of who's next that I want to bring in the business that I've met over the years. So I just think it's, we talk a lot about people being the most important aspect in the business, but a lot of times, when we hire, it's just like, well, I don't know what to do. I'm going to call a recruiter. And I just feel like while there's a lot of great recruiters out there, and I have some great friends in that business, I feel like, especially for smaller companies, we should be working our networks harder than that. And we should be, keeping that bank of our dream team to build over time.
I like that one as well. You got to keep that bank of your dream team and network. And I got to admit, that's, part of the thing I love about this podcast is getting to network with people like yourself and others that have been on here. It's just unbelievable, the people you meet and what you learn from them. So 100% aligned with you on that. And why don't we, we can wrap this up with, I guess, something that's important to all of us, and especially the business owners that are listening. But, what is the best bit of advice, say, that you could give a CPG company that's going to increase their profits above anything else?
I think it comes back to what I mentioned earlier, is just simplify and focus. I mean, too many brands have too many SKUs. Too many companies are just too broad, and they're spread out, and they're not effective in delivering everything. So do what you do best. Do it really, really well. Do it profitably. Too often we sell ourselves into losses. We sell ourselves into bad situations. This is, again, a great time to just be focused on discipline, on simplicity, on focus. That's what we like to see. That's what I believe drives profitability in most companies, is, really just pounding the core. And there's a lot of companies come to us and ask us to develop new brands for them. And we refuse. We say, we'll help you learn how to sell more of what you're already doing. We're not going to help you develop new products right now because it's bad for your business. And we want you to win as a business. We don't want to just take your money. And I think that right now it's a wake up call to everybody to really just focus on what you do better than anybody and make that happen. And set aside the stuff that's not critical.
Great advice. Focus, build your core, do that before you expand or do line extensions. And that's great advice. Thanks for that, Jeff. How can listeners find more about you or learn more about your business?
Sure. I'm available on LinkedIn, but our website is jpgresources.com. I would love to hear from anybody who'd like to connect. Certainly, I accept all valid invitations on LinkedIn and love to build the network, just like you say. I'm always learning and always looking for people who can just make us better, smarter, faster, more connected. That's what it's all about.
Cool. Well, thanks again, Jeff, for joining us on this episode of the Page One podcast, sponsored by Retail Band. Also want to thank all the listeners. Hope you guys enjoyed this interview and truly appreciate your reviews on iTunes. Hope you join us for the next interview. See you then.
Thanks for listening to the Page One podcast with Luke Peters. If you enjoyed this episode, please help us out by leaving us a rating on iTunes. Want to double your online sales? Check out www.retailband.com. And don't forget to join us next week with our next amazing guest.